Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Guy Sears, Interim Chief Executive for the Investment Association. Hello, Guy.
Hi.
So what will it mean for UK investors in UK domiciled funds in the event that we do Brexit?
So we have to be clear what we mean by Brexit. So at the moment of the referendum, when the decision comes in, there are none of my firms, the asset management firms, who are going to suddenly stop business or anything like that. So people's funds are going to be absolutely fine in terms of the continued operation, the information they get, all these things. It's going to take quite a few years to work out the implications of a referendum result if the result is to leave the European Union. The way in which European law works is it suggests there's 2 years as the exit. It may take longer, who knows. And across that period of time, I think firms will take a lot of time to communicate with their clients, explain any impacts that there could be after those 2 years. And beyond everything, I'm sure people are going to work to ensure that no one is unable to access their investments, no one is unable to have clarity as to where they can save and not during that time.
Having said that, the British investor, in fact investors everywhere, human nature is people panic in these circumstances. Say there's mass redemptions, whether or not it's founded, is that a risk?
I don't think it is a risk, actually. I think there will be a real possibility that there will be bounciness on the markets for a few days. Currency will move. We've had other shocks, the importance of this time is people who have their advisors, they contact them, they listen to what's going on. Most people are investing for the long term, and investing in the long term means not selling at those crisis moments and seeing it through. And I think it is a matter, obviously, for people to take advice, but certainly none of us, myself included, I'm invested as well in funds that my firms produce, and none of us will want to take very short-term views over stuff that hopefully even someone as old as me is hoping is on a 10-year basis.
Could we see fund houses shutting up shop in London, moving to Europe, or having to set up sort of duplicate businesses that represent their European clients and their UK clients, because we won't be part of the EU?
Yeah, so I think it's entirely possible that some of that will happen. Of course, at the moment, the UK has been very successful in terms of management of money, asset management. We run 37% of Europe's funds and assets from the UK, from London and Edinburgh. And therefore, if there are things that have to now be done in the EU and not in the UK, that will require some changes. But very often these changes are structural or legal changes. There's a need maybe to create a fund in Luxembourg and to mirror one in the UK. It won't necessarily be seen as being a significant change to investors. And if there is change, again, as I say, 2 years at least in the transition, we do have a good regulator. The FCA is not going to allow any of my firms to be unconcerned for their clients. The obligation to treat customers fairly is not one that just is because we're in Europe. That is one that is British, and that will continue to be something that I'm sure the FCA will remind us of.
Guy, thank you very much.
My pleasure.
This is Emma Wall for Morningstar. Thank you for watching.